All right, hello, welcome to this UXColor UX Market Flow Google Hangout weekly event. For those that are joining us for the first time or seeing this in syndication, we do these Google Hangout events weekly on Wednesdays at 12:30 Central Time, and we invite anybody to join us at that time or to watch them on our YouTube channel in syndication. If you have any questions, suggestions for future events, or anything you'd like us to cover, particular data you'd like to see in UXColor, please reach out to us at our website, which I've got up on the screen here, UXColor or UXMarketFlow.com. Right along the side of the page here, you can contact us in a variety of different ways through traditional means in email or through social media. So we invite you to contact us there. My name is Adam Kraft. I'm the Marketing Director with UXColor. With me today is Chuck Daner, the CEO and inventor of UXColor technology. And today for this event, we're going to talk a little bit, as we're 8 days now away from the Christmas holiday. We're going to talk a little bit about market events and what we're calling the Santa Claus Rally. Chuck just made me aware of that term. So I'm going to turn it over to Chuck and let Chuck talk a little bit about that Santa Claus Rally using UXColor technology. Chuck?
Hello, everybody. Adam, are you seeing my screen?
I am.
Okay. I'm going to talk a little bit about the Santa Claus Rally. I think the term was first used by Yale Hirsch. In fact, up here, Yale Hirsch, 1972, coined the term. And I've got three definitions up here from Wikipedia, Investopedia, and Contemporary Times from 2 days ago. So Wikipedia defines the Santa Claus Rally, rise in stock prices in the month of December, generally seen over the final week of trading prior to the new year. The rally is generally attributed to anticipation of the, quote, January effect, an injection of additional funds into the market, and to additional trades which must, for accounting and tax reasons, be completed by the end of the year. Another reason for the rally may be fund managers window dressing their holdings with stocks that have performed well. The Santa Claus Rally is also known as the December effect and was first recorded by Yale Hirsch in his Stock Trader's Almanac, 1972. Then we've got a similar definition from Investopedia. And then we've got, from 2 days ago, we have Matt Krantz in the USA Today Money section, December 15th, 2014, telling us this. If you don't believe in the Santa Claus Rally, maybe you should. Soon to be published academic research shows the effect isn't just a thing in the U.S., but around the world. Investors who invest $10,000 during the 7-day period running through Christmas and January 3rd would gain a $100 profit advantage in the U.S. stocks of about 1%, or $100 over an average non-holiday period of time. According to research from Srinivas Nipani of Texas A&M, Kenneth Washer of Creighton University, and Robert Johnson of the American College of Financial Services. So there we have a definition, and now we're going to use UXColor, and we're going to take a look at that Santa Claus effect. First of all, this is the SP 500. Let me tell you what we're looking at if you don't know what a UXColor map is. I know that Google image is going to be there. This is a UXColor map. UXColor maps numbers to colors. Let me see if I can get it to zoom in a little bit more. And so what we're looking at here, and UXColor can work with any kind of data, any type of time series or repeated observation. In this case, we're going to be working with stock price data. So this is a UXColor map, data map out of the UX Market Flow products. UXColor has three product lines, a UX Market Flow product that comes configured with a selection of stock price and volume data across the world, and it's stocks, commodities, currencies, money market, treasuries, and those go back generally in that UX Market Flow Pro product 14 years. And this is a map out of that. This is the U.S. stock market, the S&P 500 large cap issues. So each row in this map, wake this cursor up, is a stock, and each column is a day, except for the far right where we have today's value as of the last update time. You see this map was updated at 1:30:02. One thing I can do with UXColor in the stock market, I can monitor the market during the day, or if you're using it, our UXColor custom product. I talked about the UX Market Flow products. We also have UXColor Custom, where we configure and link in public domain or proprietary data into the UXColor maps. And we have a UXColor widget version that is a browser-served web version. And so this is a UX market flow map, and this is the SP 500 again. So if I'm using this to monitor a process, or in this case to monitor the stock market during the trading day, I'm going to go data update. Goes out to our server. It came back. Now it has a time as of 1:35:27. Then what I'll do is I'm going to sort this map. These sorts vary by the data type. This is the sorts that are for a U.S. stock market map, and everything from sorting by value at the right-hand side. If I sort by value, let me bring in running parallel to this map is a list of issues. Move this out of the way a little bit. We'll get to that Santa Claus rally. Don't go away yet. It's not going to be that long. I just want to show you some basics of these tools. So here I sorted that map by the value at the right-hand side. And so Priceline in this SP 500 map is 1059. The lowest valued stock is Frontier at 646. What I want to do now is I want to sort this. I'm monitoring the market. I just did an update. I sort by percentage change. So now the question is, how's the market doing today? And let me resort that. Oop, wrong. I hit percentage change span, which is calculating the change over whatever the span is of the interlace window, and that's that column. Southwest Airline over this year is up 108%. Electronic Arts 107%. And I hit the wrong sort. Transocean is down 61.27%. The sort that I wanted to hit, you see that these maps, the map and the issues list scroll together. I wanted to hit this percentage change right-hand side. So that gives me the change. And this is the effect that you're seeing here is a beta effect. The stocks that were down the most over the last, this is what, each of these is a day, over the last 10, 20, 30 days are up the most today. And let's go see if we see the reverse of that at the other end. Not as much. So we're seeing a little bit of a beta effect. And the beta effect is that stocks that are moving down and coming back move more than the market. And so what we want to do now is to look at this column, this percentage change right-hand side. I'm monitoring the market. And I see right now that this time of the day, again, this is 135.27 over yesterday's close. Neighbors Industry is up 13.13%. Noble Corp, Transocean, you can set these widths and move those columns around, and you can decide what fields you want to show. At the other end of the market, FedEx is down 4.64%, probably related. United Parcel down 2.2%. Less retail sales, so maybe there's an expectation that they're going to have less volume. FedEx, United Parcel going to have less volume this retail season. I think it's a little bit early to decide that this retail season is not good. But right in the middle, Prudential Financial, so there's 500 large cap issues. Prudential Financial is up 0.92% today. This is a big update for this market. And so in pretty general terms, you can take out of the SP 500, you can take that middle issue up 0.92% during the day, and you can guess that the index is up about 0.90, anywhere from 0.85 to 0.95%. So that's how you use UXColor to monitor the market or monitor a process. And this, let me explain this map again. This is as I said, stock prices. Each row is a stock, each column is a day. And what's fundamental to understanding about UXColor is this 1 year is the interlace window. So this is a 1 year window. It's set at December 16th to December 17th, 2014. In the stock market, this changes based on your data type, but in stocks, that's 253 trading days. And so color, and the color values are relative. Let me zoom back down a little bit so I can show you a little bit more. Color is relative to the range of values over that interlace time. So in this 1 year interlace window, and this spectrum, you can change the spectrums. This grayscale spectrum will show you banding if you're a wave trader, that you might like that a little bit more. This is a default spectrum. You can change these spectrums. You can change the color, build your own spectrums, a variety of color controls in UXColor. But this is a 1 year color window. So red is relative low, white mid-range, and green relative high to the values over this 1 year color window. And so I can go in here. Let me zoom back in a little bit. I can go in and quickly find stocks that are up today. So here's a stock general growth properties has had a string of up days over the last 20 days or so. And so that's one thing UXColor can do. I can stick in thousands and thousands of stocks, and I can also, let me find that general properties again. I can do a variety of pattern sorts. Let's see, where was that? Let's see. Well, I can't find it now. Let me go back. General Dynamics Corp. Let me clear that. What I wanted to show you is you can also sort for patterns. So we've got that percentage change. So I want to find that stock. There's that stock that's been moving up over the last few days. Anyway, there, general growth. Okay. So what I want to do is sort for general growth patterns. And so now I'm going to ask UXColor, show me the stocks that are moving over the last few days, over this last 1 year analyzed window, like general growth. And I can do that from a variety of locations, but I'm going to just do it from, yeah, sorry, let me clear that out again. And let me do that from list, general. General growth. There's general growth properties. So what I'm doing is I'm sorting to general growth properties pattern, and so I've separated the market. I said go find me stocks over this 1 year window that are like general growth properties. It went out and found those and separated that map that way. So you can do a lot of pattern matching, and a lot of our research is in pattern matching. So right now I want to show you, get back to explaining something about, let's go back and sort this by name. So now we're sorted by name. I've got 500 issues here, basically 500 line graphs that I'm scanning across. And I can set that interlace window. I just want to, before I go to the, I can, if I want to see a more local context, I can set that interlace window to narrower ranges. If I want to understand what's going on over the last month and see a real local context. The market had a bottom going in, but it looks like it's coming off of that bottom, which might really lead to some idea that maybe the Santa Claus rally is a little bit more true than I'm going to show you. I can take that color window. Let's go back, go to a 1 year color window. I can scroll that color window back in time. I can study patterns. So I'm going to go back. This is the interlace controller. This moves the window through time. I can move it 1 day at a time, 1 point at a time like this. I can change the width. But what I want to do is go back to that 1 year window. So now I'm back. This is probably March 2009. So you go back and study patterns in history. And that's what we're going to do with the UXColor now. So variety of sorts. The interlace color window. This is a 1 year color window. You can move it through time, explore patterns in history. A variety of color options. You can line graph something. Let's go option that an issue from the map. Let's go line graph that issue. This is what our line graphs look like. You can zoom in on those line graphs like this. You can add technical indicators. Put a 20 period moving average on there like that. So there's a little bit of the capabilities of UXColor. And let me go back and show you in the UX Market Flow Pro product. You have commodities and futures, currencies, money and treasuries. We cover, in this product, we cover 15 different countries. So generally you're going to have maps that we build that we think are analogous to the SP 500, the large cap stocks across those countries. We have ETFs and intraday maps. If you want to go see what an intraday map looks like, let's go see what yesterday's trading day looked like. Higher frequency data. And this was yesterday. And this was a little bit surprising to me. So what you see is that this is the afternoon. This is 30-second values. So there's 247.51. And I can scroll that window through time. And I can watch yesterday's pattern. But what I'm looking at is yesterday closed on a sharp downturn. And so does that downturn turn forward to today? Well, no. Today's market is up. We saw about 1%. So let's go back now. We're going to explore the Santa Claus effect. Let's bring over again this definition. Stock price seen in the month of December. And so now we're going to look at and explore patterns in history, and we're going to look at 10 years of data. So this is, Adam, is this showing okay? Have I lost Adam?
No, I'm here. I just had myself
Oh,
muted.
okay.
Looks good.
Okay. All right. Sorry. So we're going to look at 10 years. So let me move these out of the way. This is last year, and I'll show you how I set these up. This is the UXColor dashboard. All the controls are across for UXColor are in this dashboard. So I set a 1-month window, color window. This is the SP 500 again, and I scrolled it back. I can scroll it again. I can, if I make my keyboard arrow, I can scroll back and forth. So what I want to do is to look at the period of time starting from early December. And that's how I set up these maps. And so this is a 1-month window, and that's that interlace window. So and then I just brought them down to show them to you, oops, like this. And then I just brought it over here so we can see about like that. So this is December 6th through January 7th last year. And so certainly we see a Santa Claus effect. This bottom, local bottom, was December 12th, and we came up. We might want to know how much would we have made if we had bought stocks in that period. Let's suppose I take it back a little bit farther. Suppose I had bought stocks right at the bottom of that downturn. And now I can go out, let me expand this, and just show you some of the capabilities. I'm exploring now what would have happened, I'm going to calculate the change over the span of the interlace window. This is a 1-month window, 21 days, December 12th to January 13th. And if I bring that in now, and this is the column we're interested in, bring it over here, we can see it. So over that period of time, Red Hat was up 24.19%. Let's go down again to that 250th stock, get right about the index. So that index would have been up probably about 2.7%. So last year, definitely we see that there was what you can call a somewhat of a Santa Claus effect. Now we're going to go back and see how much it occurs in history. And we're going to close by looking at it today. So this is December 13th, 2014, last year. And here is December 12th to the 2013. Again, we see that same pattern. Here's the 11th to the 12th. Again, we see that if we had bought stocks back here, let me make that cursor hot. December 15th, and one of the things today is December 17th, so I want to have an opportunity to act on this. So, and here's the previous year. This is December 10th to December 11th. December 7th, 2010 to January 5th, 2011. We see the same kind of effect. Here is 09, December 7th, 09 through January 6th, 2010. Again, we see the effect. Here is the December 5th, 2008 to January 6th, 2009. Again, we see a pretty strong effect. So now we've got 1, 2, 3, 4, 5, 6 years. And we saw that research is coming out. I wondered what sample, what period of time they looked at. And those types of studies are generally non-parametric studies where they see what kind of, what the mean shift was. So now we're December 7th, 2008. So now we don't have it. So now we're back. So 1, 2, 3, 4, 5. We saw it 6 years, but we're not seeing it December 7th, 2008. Here is December 6th to 2007, not that dominant. Here's December 5th to 2006. Now, one thing to realize is December 8th and into the 9th and the 9th and 10th, we were coming out of that. Let me go back and look at that SP 500 map again. So if we're going to go back and look at the period of time 2008, 2009, let me zoom back down a little bit. Here we're into the market crash. So the effects for that year are an effect can be swamped by this overall stock market, this financial crisis effect. I just wanted to show you. So you can't take things out of the context. You're going to want to understand the market trends and macroeconomic events. So this is the 5th and the 6th. Not much of a so I have what? 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's see. Do I have I'd like to see if I have one more year. Let's see, and I do. Okay. And here's the 4th. Let me move this just over for a second so I get these on the screen for you. And here is December 4th to December 5th. You don't see that much of the effect. So what we see is that December 4th through the 5th, not as much. 5th through the 6th, not as much. 6th through the 7th, probably not. And we can look at more of that. 6th through the 7th, pretty. This market lacks any strong pattern, any strong trend. But then beginning the 7th through the 8th, we see a downturn. Again, we're going to go into that the financial crisis, and there's noise on in the American economy about this financial turmoil. As even before the market crash, we have a turmoil in the markets. But here we see it December 8th to December 9th, a fairly strong effect. December 9th to the 10th, a strong effect. Let's go see if we had bought stocks in that period, sort by the span over that period of time. What would we have made this year? You can see how not everybody, but let's go out and view. Let me restore that issues list. There's the issues list. This is what we're interested in, is the span, and it's the span over that period of time that we're looking at. Let's get down to the 250th. So that year, the index was probably up 10.08%, so a strong effect. So we see it December 8th to the 9th, 9th through the 10th, 10th through the 11th. We see it the 11th through the 12th, 12th through the 13th. So their research is looking pretty good. 13th to the 14th. We see it strongly. Now let's go back and bring up that today. So now this is, let me bring this up to, I just scrolled that interlace window forward. You know, I've got a 1 month window. So now I'm today. And this is November 18th to December 17th, a 1 month window. So if I'm hitting my bottom right now, and let's zoom in, and I'm going to show you how I sort of track trends in UXColor. I want to understand, and I'm going to I just made the cursor, I just clicked that to make my keyboard arrows hot. And now I'm August, whoops, I use a gaming mouse, and it's pretty darn sensitive. So what I want to understand is, here's the market trend. So we're looking at December 2nd. I want to understand what the trend in this market is. And this is a pretty diffuse pattern right now. Looking for some direction. December 11th. Now we see December 15th, the market moved down. December 16th, December 17th, and that's today. Let's go update this. Data update. And now we're at 153 today. And we're seeing that it looks like we might have hit a local bottom 2 days ago. So we might be seeing the Santa Claus rally starting right now. And we'll take a look at that maybe at our next hangout, and we'll see what happened. Okay, Adam. So 6 years, say yes. Before that, we had some ambivalence, but it looks right now that, and I was going to say through the study that I had done that I wasn't going to believe in the Santa Claus rally, but I'm coming back right now and saying, you know, I think we might be at the start of the Santa Claus rally. And you know what I'm going to do is I can set the time. I can set the time to a narrower window. And so now I just want to see again if I've hit a local bottom. And I think I have hit a local bottom. So what I might see is the Santa Claus effect is just starting to take hold right now. Okay, Adam, back to you. I'm done.
All right, fascinating study, Chuck. I appreciate it. You talked about macroeconomic events, and today, almost even as we speak now, I know that traders are anxiously awaiting the final Federal Reserve announcement of the year, and a press conference with Janet Yellen at 2:30 Eastern Time. So certainly I wanted to mention that because we've marked in our intraday maps, and at one point during his presentation, Chuck gave you a demonstration of an intraday map. And these FOMC announcement days are always really interesting to look at in our intraday maps.
Hey, Adam, if you give me back the screen, we'll take a look at one of those.
Sure, sounds good.
Okay, so this is our intraday maps, and there's two types of announcements that can affect the market. One is the FOMC statement, and one is the release of their minutes. They happen on Wednesdays. Let's go back to the 10/29 FOMC statement date. I just said open that map for me. Here it is, and here is this map. And the statement generally happens at 2 o'clock. And so this is 1:59, 2 o'clock. You can see what happened to the market then. But what's more than that, than the statement, is the minutes. Let's go look at a day that has minutes announced. The minutes are more about what an idea of what the market, what the Fed's going to do over the next. So here's the day of a minutes. So this is the minutes. If I step back, this is November 19th, so about a month ago when the minutes were, and Adam's saying pretty much right now we probably have them coming out. And so if I step this market back, sometimes they're a lot more pronounced than this. I'm just scrolling back. This is 30-second data again. And this is probably 2 o'clock, right about here, 2:03, 2:04. So what happened is, as we went into that announcement, the market is always pretty much uncertain. Sometimes you'll see a pre-release sort of movement. We don't see it here, but now we're at 2:02. The announcement's been made, or the minutes have been released. And this was, I think, last month that the Federal Reserve is not going to tighten the monetary policy, and the market short term went up, and you see it goes up. Now we're going up. Now it digests the news, and now it's pretty much decided what it's going to do. Well, and then we had it go back down. So there's a little bit about what you'll see in intraday data, and the UXColor widget and market tracker that we'll be releasing sometime over the next few months will actually let you watch that day unfold. And this is what it would look like. I can show you that day unfold. This is a animation that will let me. If you've ever seen our video, our commercial video. So what this is doing is adding a minute or 30-second data and then recoloring the map. So we're watching the day unfold. And that's a little bit about what you can do with UXColor. Okay, Adam, back to you. Sorry, little aside.
No, I appreciated it a lot. And to clarify, what Chuck was talking about, the product in development, is our live ticker that will demonstrate that in 30-second intervals throughout the day. Did I understand that right, Chuck?
Yeah, so what it does, it starts out, you start with the first two observations in the morning. The market opens at 9:30, and it'll color based on those, and then we start adding data, and we're looking at 10-second and 30-second data, and then recoloring the map. So you'll see and you'll watch the day unfold. You can sort the map you saw me do a pattern sort earlier. You can sort that map during the day and pick out a stock that you want to track and watch for the next 10 minutes or so. And so it's a real-time UXColor Map market unfolding.
All right, but today we do have available the intraday data maps that you used in this demonstration with the data in 30-second intervals, and that becomes available at the end of the trading day. So as soon as the trading day ends today, very shortly after that, the intraday map for today will become available, and that's available through our UX Market Flow Pro product. So on our main website here, if you navigate to UX Market Flow for Finance and choose the Pro product, which is only $79 a month and has all of the data available in that catalog, you can go into the Pro product here, subscribe. You get your first week for free, and after that it's billed on a month-to-month cycle. So if you wanted to take a look at that intraday map after the market closes today, what time do those get done, Chuck?
The market closes 4 Eastern time, and so we generally have those up, I think, right now about about 5 minutes, 5 to 10 minutes after the market closes. And
All
there's a lot of interest in looking at the intraday pattern today to predict tomorrow. And there are some features on our website where you see some not rigorous research, but some minor research or some that we've done where it looks like that's true. You can pick up some intraday patterns, and that intraday pattern will tell you a little bit about what's going to happen tomorrow.
Yeah, it's fascinating stuff with a lot of room for creative thinkers and people that know how to use new technology to learn some things themselves and start the paradigm shift that is data visualization for the 21st century, which is what we call UXColor and UX Market Flow. So, as I was pointing out to wrap up here, the UX Market Flow Pro product that Chuck used during this demonstration, you can go to the website and sign up and use it for a week for free right now. And I strongly encourage people to go ahead and do that. You have nothing to lose if you don't find the product to be valuable. If you don't think it's there and you want to send us recommendations for what would make it more valuable to you, we always appreciate that as well. But there's a lot of value to be had in going out and giving it a free try for a week, particularly today when you can get a dramatic FOMC Minutes intraday map at the end of the day. Those are always fascinating to look at. So I will go ahead and close this one out for today. We'll be here next week. Well, next week's Christmas. Are we going to take next week off, Chuck?
I think we should.
Okay, so next week we won't be here. Will we do one the week between this and the New Year?
Well, sure. Let's go ahead and do one, and we'll take a look and see what how that Santa Claus rally is unfolding.
Yeah, I think that would put us on New Year's Eve if we did one 14 days from today. That'll be December 31st. Do you want to keep it at that time?
Let's go ahead and plan that, and if we change, we'll change it on the website.
Okay, so the place to go on the website to see these and when they're being held is right up here at the top, the button, Next Hangout, and when the next Hangout is scheduled. And typically we do them every week. With the holiday, we may adjust our schedule a bit. So join us next time. Send any questions or recommendations or suggestions to us at UXColor. We look forward to talking with you, and have a great holiday season.
Thanks, everyone.